Well, hello, everybody. Josh Greason coming to you live from Forex Bootcamp. Happy Saturday. Hope you had a good week. Hope you're having a good weekend, getting some chill time. I just came from Starbucks myself with my family, had my iced espresso, my favorite drink, with some sugar-free vanilla. And anyways, hope you're chilling, getting some relaxed time. And if you're a father, hope you're having a good Father's Day weekend in advance. Maybe you get 2 days out of Father's Day instead of just one. Anyways, so what are we doing here today? Today, for those of you that don't know, I've been doing a series of daily videos, one video per day for 30 days about my Forex trading life. What does it look like? How does it fit in with regular everyday people life like you and I both have? I have, full-time job, wife and kids, other pursuits, hobbies, commitments, attachment, all the things that we have, right? Busy, just like you. How do we fit in Forex trading in the middle of all that? What is the Forex? What is Forex trading? How did I learn? How can you learn? How much money can you make? How much time does it take? What's the long-term goal? Why did I get into it? What kind of money am I hoping to make? And what's my plan to get there? What education did I get? What mentoring do I get on an ongoing basis? What tools, what software, what strategies? What do I actually have to do to enter trades? All these nitty-gritty things we're talking about, kind of familiarizing you with charts and risk management and trading disclaimers and all these little details in these 30 videos. So I hope you're having fun with it, whether you know much about trading or not. It helps you get to know me. If you're friends with me, you like me, you want to know what I'm into, what kind of stuff I'm doing in my life, maybe these videos are a good way to do that. So today's topic is, as you saw, hopefully, don't be emotional. So why is that today's topic? Don't be emotional. Now, obviously, there's a time and a place to be emotional, right? I have a wife and kids. I'm passionately in love with them. We all have passions and hobbies that we're like excited about. And, we're supposed to love God, love people. Obviously, there's a time and a place for emotions. But trading on the Forex is not that time nor that place. So don't be emotional in the sense of trading. So why am I doing that topic today? I'm in a company called iMarketsLive. About a year and a half, 2 years ago, it had only 1,200 people in it, 1,200 people. Now, a year and a half, 2 years later, we have over 70,000 people, almost 80,000 people. Nuts. It's growing crazy. It's spreading like wildfire. People are excited. And that's because, trading on the Forex used to be kind of reserved only for the financial elite, the big international banks, governments, all that sort of thing. You had to have $1 million to come to the table to trade on the Forex and multiply your money. Your banks have been multiplying your money behind the scenes all this time with your money. They keep the profits, and they give you a little 1% interest as a payback, as a tip for helping them get rich, send their kids to college while we're, average people struggling paycheck to paycheck, bill to bill, and all that kind of thing. But now this power has been placed in the hands of everyday people through brokerages, through the internet, and through educational programs like this one. So that's why people are excited. That's why the company's exploding. But within that big company, I'm in a part of a smaller group of 4,000 or 5,000 people called the Ninja Group. And our leader of that small group, Arnold Thompson, has 4 kind of guidelines that he emphasizes to us repeatedly. And here they are. I made a little ugly Microsoft Paint drawing for you just when I heard them, just to remember them. And it's ugly, but it's still around. And there it is. What are they? Be patient. Be consistent. We've already done 2 videos on those, by the way. Don't be emotional. That's today's. And then the last one down there I'll get to eventually. Don't be greedy. So don't be emotional, though, is today's topic on day 16 of 30. Don't be emotional in trading. So now that we've talked about that, here we go. What is today's video actually about? I'm just going to say don't be emotional, and that's the end of the video. No, I have actually tips for removing emotion from your trading. Because emotions get in the middle of it, as you see right there. No matter the situation, never let your emotions overpower your intelligence. You want to let your intelligence, your brain, make rational, logical decisions when trading. And when we get our emotions involved, that tends to not be the case. We make bad calls and just do dumb things that we actually know better than. But because our emotions are high, we don't do what we know we can do. So there's another quote I want to show here in a minute. It's going to appear right below me here. And it's applicable where I'm at in the conversation any second now, right there. When you need to make a decision, don't let your emotions vote. And so that's the goal in trading. How do we do that? So I have some practical tips here. I made some notes on my phone. I just wanted to kind of summarize. First one, how do you remove emotions from trading? Demo account trading. What is a demo account for those of you that don't know? You can trade with a demo account, which is like play money, like Monopoly money, fake money. It's not real. It's not going to cost you anything. If you blew the whole demo account, it wouldn't cost you a dime. So that's an awesome way to learn. All new traders, we recommend to trade at least a month on demo trading before you ever go live. Longer if it takes you longer. You know, everybody moves at different paces. We have different times to put into the learning process and all that sort of thing. So if it takes you longer, it takes you longer. When do you go with live money? Start trading with live money when you have mastered something and gotten consistently profitable with it on demo. Then you go live. Makes sense? You don't want to risk money unnecessarily while you're learning something. And that goes true in the beginning when you're a beginning trader, and anytime in your trading process when you are going to learn a new tool, a new software. You're going to start following maybe the trade alert ideas of another mentor or another trade signal service, or you're learning a new tool, trying out a new strategy. Always do it on demo first until you're consistently profitable, then switch over to a live account and go for real money. Make sense? No risk while you learn. Take the risk when you are when you feel like you've gotten it down pat. Okay, so that's the first way to remove emotion from trading. Why? Because when it's fake money, you find that you really don't care if you lose it, right? It's like, if you lose it, you gain. It doesn't really matter. It's not real. Boom. Make big trades, make small trades, and none of it matters. So you'll find that it's very easy to be emotionally disattached from your trades on demo. Now, when you go live with real money, you'll find suddenly your heart is engaged. Your emotions are engaged. Jesus said, I came from a Christian background, so Jesus said this. He said, "Where your treasure is, there will your heart be also." So he was speaking in a different context, but nonetheless, it holds true here in trading, and that is where you put your money, your heart follows after. You put money into something, all of a sudden, boom, you find that you are emotionally engaged. And so the goal is, with trading, to remove that emotional attachment and make rational, logical, pre-planned, wise decisions, and to have that work in your favor, because trading can make sense, and if you do it in a logical way without letting your emotions get involved, you will be more profitable. So that's the first thing. Second thing has to do with being consistent on several fronts, which you saw one of our first rules. Remember, be consistent was one of those 4 rules. Anyways, so be consistent with good risk to reward ratios. I'm imagining a chart here in case you're wondering why I'm making fingers in front of my face. Pretend my eyes is the entry point on a chart on a sell trade you want to get in. So you want price to go down. So you set your stop loss up here. You want to have a little tiny risk area and a big potential reward area. Always a small risk, big reward. That's the ideal way to trade. If you do that consistently on all of your trades, you could actually lose more trades than you win and still be profitable. That's the goal. Now, ideally, obviously, you don't want to lose more trades than you win, but you could still be profitable doing that. So imagine now if you win more trades than you lose and you're consistent with your risk to reward. Little risk, big reward. Be consistent with that. Now, part of that is not only where you set your stop loss, entry point, and take profit points, but lot sizes. Lot sizes. We talked about that on yesterday's video. Pips and lot sizes. How does a pip translate to a dollar amount? How much money are you risking or being rewarded? And that has to do with lot sizes. You want to be consistent with the lot sizes on your trades. Not wait till you feel really, really excited and good about a trade. Then all of a sudden you make a huge lot size and now you're not using your proper risk management. We recommend you only risk 1 to 3% of your whole account balance on any one trade. So you could actually lose 30, 40 trades in a row before you went through your money. So obviously the goal is not to do that. If you're doing that, you're doing something wrong. You weren't paying attention to the academy. You weren't listening to your mentors and all that kind of stuff. But be consistent with your lot sizes. If you're excited about a trade, don't bump up your lot size. If you're bummed about a trade, don't shrink it down. If you're bummed about a trade, don't get in the trade. You want to be consistent, risk your same 1 to 3%, and that's it. Stick to your rules. Stick to your trading plan. That's the other kind of aspect, because there's more than just lot sizes and risk percentages in your trading plan. There's also only get in a trade if you have this criteria met and this criteria. Remember those things we've talked about on previous videos. RSI over 70 or under 30, MACD divergence, touching the Bollinger Bands, all these kind of things. Stick to your plan. Don't go off the rails and let emotions lead you. And that goes true when you're in the middle of a trade as well. You know, if it looks like a trade's going to hit your stop, don't start bumping your stop back and increasing your risk. No, you already analyzed your trade. You put in your numbers. Stick to your guns. If you hit your stop loss and lose the trade, no big deal. There's always another trade. And if you're using all the things that we're teaching you and applying the education, the principles, the tools, the strategies, you're going to start winning. Okay, I can't make you a promise. Obviously, I can't guarantee you. I'm not allowed to do that per FTC guidelines, right? I can't promise that you're going to succeed. We're all going to get different results, but our goal is to walk you along with what we're doing that's been proven to work. It's got proven results. I can point you to a website that shows you, like for instance, our harmonic scanner has 89% profitable trade calls. Hello, that's really good odds. Our SwipeTrades team, those professional traders that send trade information to your cell phone on an app. You copy it, you paste it, takes 30 seconds, you get in the same trade that those guys analyzed. Those guys have a 70% success rate over time. Now, do they have a bad week here or there? Sure, but they've never in their existence had a bad month, and they've been consistently profitable. So those kind of things, right? If just because they have a good odds or the harmonic scanner has good odds, you're not going to bump up your lot size. Okay, you're going to stick to your rules, stick to your trading plan. Use the tools and the strategies that you know work, that you've proven out on demo, and all those sorts of things. Just be consistent. Don't be flaky, and no matter the situation, never let your emotions overpower your intelligence, right? If you could stop being emotional, that would be great. Now, this is kind of a funny thing. We'll talk about that in a minute. You're wondering, why is Buddha on your screen? You just said you're from a Christian background. Hey, we'll talk about that in a second. First of all, my last tip for not being emotional in trading is automate. What does that mean? There are ways to automate your trades, okay? iMarketsLive doesn't have any, but there are third-party products out there that I can walk you into. I can, give you some exposure to. But these automated trades are called bots. You can put them on your charts. They can open trades for you, close trades for you. They can follow certain trade signals, all sorts of things that automate. And if you're automating, that means you went in there, you put some settings into this bot. It's a robot. I mean, talk about not being emotional, right? Robots are known for not being emotional. So you put in the thing beforehand using pure rationale and logic. You place it in there using proper risk management, just like Spock, right? He's not an emotional guy, even when he needs to be. But in trading, that would be ideal, right? Sad, happy, jealous, fearful. He's always the same. Can't get hurt if you have no emotions. You don't want to be on that roller coaster ride of emotion, right? Or trapped in an emotional world, right? Don't play with my emotions. When you need to make a decision, don't let your emotions vote. Okay. So hope these memes are all making sense now, right? But so automate when you can. If you could automate trades, I mean, how much easier is that to remove your emotions? You pre-program it, you pre-plan it, you pop the bots on the charts, let the bots do the work. You go on about your happy life. You don't have to stay in front of the charts. You're not getting emotional watching oh my gosh, watch the price go up, watch the price go down, watch the price go up, watch the price go down. You know, I had a saying on here, actually I have it on my phone. Let me get it for you real quick, and that is, don't close the trade, close the chart instead. Learn to rest and do nothing and go about your life. Set it and forget it. So don't close the chart. Don't close the trade. Like that, what that means is you're in the middle of a trade and it looks, oh my gosh, it's making you feel nervous. Instead of closing the trade, if you've already analyzed and determined there's a high probability of this being a successful, profitable trade, which otherwise you wouldn't have gotten into it, right? Then don't close the trade. Stick to your analysis, stick to your guns, stick to your trading rules, admit your trading criteria. You determined it was going to be a good trade. Don't live in a glass case of emotion like this guy down here. Stick to your guns. Let it ride. Instead of watching it and getting all nervous and wanting to close the trade, because you'll feel tempted to, instead of closing the trade, close the chart. Walk away, set it, forget it. Go about your life. Go enjoy your wife, enjoy your kids, enjoy your life, other things that you're doing. Don't spend your life in front of the charts getting all emotional and stressed out and all that. And, that's it. So automate, automate, automate. Bots are awesome. I can walk you through some amazing bots. I use about 3 different bots, actually, on different things. So awesome. Minimizes your actual trading time, minimizes your trading decisions, keeps your emotions out of it. It's just amazing. So, Mr. Spock, right? So, you saw some Buddhist memes here, pictures a second ago. I already said I'm from a Christian background. Why do I have Buddha on there? I remembered the saying where he says, All suffering comes from attachment, or desire is another word for that. Emotions being attached to something. Emotional attachment to a trade will wreck you. Just make logical decisions. Emotional attachment to an outcome. I must win. I must win. I must get money. I can't let the market beat me. I can't lose. The root of suffering is attachment. The Four Noble Truths. I like the modern English version in the middle there. Life sucks. Life sucks because you want stuff. That's attachment. If you don't want life to suck, or your trading experience to suck, stop wanting stuff. Stop being so attached to the outcome. Stop letting your emotions be involved and engaged and impassioned and fired up in your trading. And the last one of those Four Noble Truths was, if you want your emotions to stop being involved, then follow the Eightfold Path, which will appear down here in a second. And I'm not a Buddhist, but like I said, principles of truth are principles of truth, no matter where you may find them. And so I'm all for that. So some of those principles of truth that I'm referring to in the light of trading and removing emotions are having a right view, having right intention, right speech, right action, livelihood, effort, mindfulness, concentration. If you put in mindfulness and concentration and plan your trade, analyze your trade and the charts, and you made the right decision. I'm going to do a buy trade. I'm going to set my stop loss here. I'm going to set my take profit there. You took right action. You entered the trade. That's it. Remove your emotions. Close the charts. Walk away. Live your life. And that's the most profitable way. I saw a quote the other day. It said, the most profitable trading strategy is set it and forget it. How true is this? Because emotions will ruin your trading decisions. I actually have another couple of videos planned on new trader common mistakes or something like that, and common trading. It's like two different things. And so many of those things, when we go over those, you'll find yourself thinking back to this video about not being emotional and how these things would prevent those mistakes. Removing emotion from trading, sticking to your logic, sticking to your analysis, sticking to being rational is so key to success in trading. I hope you find those tips that I gave helpful in doing that. And I guess that's all I wanted to say on today's video. I hope you have an amazing remainder of the weekend. I will be here tomorrow to do my day 17 of 30 video. Please join me for these remaining 14 videos. I hope you've had fun with me on these. I'm having fun making them, sharing my trading journey with you, my trading life. For those of you that are into trading, I hope the specific trading stuff is helpful. For those of you not into trading maybe, but you like me, we're friends, and you want to just know what I'm into and how I'm living my life and what kind of stuff I do with trading, and just find me interesting, you want to know about my life, hope these videos are helping you do that. So no matter who you are, I hope you're getting something out of these videos. Plus, you can take these principles about not being emotional and being rational and logical in your decisions, not just in trading. You can take that and apply it to your everyday life. So I hope you will. I hope you'll get something out of it. That's it. God bless you. Have a great weekend. Join me tomorrow and for the remaining videos. See ya! Don't be so emotional, baby. All right, see you guys. I'm waiting for my fun Whitney Houston video so I can get a little snapshot here. So if you're hanging around, you don't have to. Oh my gosh, Spock now. We're staying around here. We're taking all day. All right, guys. Maybe I can sing, I get so emotional, baby, for you 80s fans. All right, here we go. Don't be emotional when trading. Peace out. See ya.